What is going on, everybody? It is your most inconsistent uploader out there, Christian Robert, coming at you with another monthly dividend update for you. And I'm actually going to include some other stuff in this as well. So as always, if you haven't already, make sure you subscribe and comment down below what you think of the video. And to start things off, I actually jumped back into M1 Finance recently. I'll get into this probably in a little bit, but I'll just talk about it now. So my main portfolio is TD Ameritrade, which I'm going to go through with you as well, because I hit another milestone kind of. And so it really got me thinking that, my portfolio on TD is kind of all over the place. I have a few speculative plays that I would also consider swing trades. I have some growth stocks. I have dividend stocks. So that was like the dividend portfolio, but it's quickly becoming the not dividend portfolio. So it got me thinking to M1 Finance about how simplistic it was for me in the past, how you can put as many stocks in this as you want, and it just automatically buys itself pretty much. So I got back in here thinking, okay, I'm going to turn this into my purely dividend portfolio. And then sure enough, I like Amazon and Tesla, so that makes up 60% of the portfolio. So I'm kind of just throwing a few bucks into this account every week when I have the extra cash. But as of now, we're sitting at 30% allocation for Amazon, 30% for Tesla, 10% for QYLD, which I love, 4% for aggressive dividends, 10% SPHD, 10% Maine, and 6% realty income. I'm pretty comfortable with this portfolio how it is if I can not mess with it. The only thing, I actually really want to get into Google. I don't know if I will add it here because I probably will never buy a $1,500 stock on TD Ameritrade. So I might add Google in maybe like 10% and drop Tesla and Amazon down slightly. But I thought I'd share this with you because dividends are starting to come in from this one. Nothing that I'm going to start keeping tabs of yet because it's so insignificant. But let's jump into my TD Ameritrade. As you can see, I'm sitting at $125,541. So yeah, I guess you can say this is my 125,000 portfolio update. But let's take a quick look through. Tesla is slightly down from its all-time highs, sitting at $438. I am currently up 381% or $69,000. And then a few changes. I have heavily added to QYLD. I have 300 shares, an average cost of $21.40. So I'm up 1.67%. And the dividend reinvestment is off on all my stocks currently. And this one, I'm not going to get too much into it in this video, but I am using a lot of margin right now. And a lot of people either love it or hate it. And I'm not here to lean you one way or another. I simply like using margin money right now, primarily because I am so heavily invested in Tesla. It gives me a way to kind of hedge my Tesla position because without margin, my portfolio would be pretty much all Tesla and a couple of other stocks, and that's it. So as you can see, my portfolio, there are a ton of different stocks in it and a few new ones. I've been adding to Planet 13. I have 700 shares now, and I'm up 37%. I'm really happy with that. And then another new position is TTCF. That is Tattoo Chef. It recently completed a reverse merger. I purchased it a few weeks ago at $23.50, and I am up 6.94%. I think this is a really interesting stock. It is an organic frozen food company. And what I like about this is that it is still pretty early on in its company time frame. I read something where they're only in about I want to say between 7 to 11% of Walmart stores, and within the next year, they should be in over 40% of Walmart stores. So that statistic alone tells me that there's a lot of growth ahead of itself. So I wanted to jump in early at a riskier time because the rewards will outweigh the risks in this position. And then other than that, I haven't been doing much. I have some Square I've been adding. I have 8 shares at a cost of $157.50. So to my point earlier, you can see that, this isn't really the dividend portfolio anymore, especially with Tesla just dominating this this portfolio. But it isn't like I intended that because does it say here? It doesn't say how much of my actual money is in here, but if we do some simple math, if my market value is at 87,900 and I'm up 69,600, that tells you that, I only have a little bit more than $12,000 of my own money invested into this one stock. It's just gone up that much. So, it's not like I've put all this of my actual money into it. It's just profits at this point. So I'm kind of torn between how to balance this portfolio out right now. So I kind of keep going back and forth, driving myself crazy, telling myself like, okay, well now you have to focus on growth because this is a growth portfolio. But then like my bread and butter or my passion from starting this YouTube channel or starting really taking investing serious was all about dividends. So I'm really kind of just torn on how to balance this portfolio out. But I think I've dragged this out enough. Let's jump into the dividends because that is why you guys are here. So quickly scrolling through my dividends, you can see we started the month off. Keep in mind this is for September. I'm late as always on this, but 761s from Hanes Brand, 101 from Wells Fargo, $11 even from QYLD. I'm not going to go through every single one, just the significant ones. 1684 from IBM, which I was just informed that I believe they will be doing a, what's it called, where the company is spinning a spinoff of one of the entities within IBM that'll be spinning off. And from what I'm told, that usually increases value. So once the spinoff occurs and I own both companies, it should be up a lot more. I'm not quite sure on that though. Then we have 1432 from Raytheon, 7405 from 3M. Very proud of that. This is a very, I would consider this pretty defensive, pretty safe, pretty boring, but a very solid dividend for me to be bringing in as my, it is my second largest holding, so that's really exciting. I'd like to get this one to 100 maybe in the next year or so. Then we have my favorite 2953 from O Realty Income. I might put the dividend reinvestment, the drip, back on this one because I just love it so much. Even though I turn all the dividend reinvestments off, this one I might throw back on. 1052 from Maine. And then another one, Stag. I'd really like to increase this to $10 a month, but we are a ways off of that from happening. 1970 from Qualcomm. Another 1060 from Quild. Why is that? 3283 from AVGO. 2279 from SPHD. And lastly, 426 from PSA. Why did I get paid twice from Quild? I got one the first. Okay, so it was just the way the month played out. But if we add up the month, I received $312.38. Last year, I brought in $137.24, so that is a very big increase. So year to date, we are at $2,165.77 with still October, November, 3 more months. So we could hit $2,500 still. That would be really awesome. But one other thing I wanted to touch on is the fact that I use margin, and Like I said, I'm not here to say margin's awesome, you should use it. You know, everything comes with a risk. I've been in the game long enough to know what I can handle as far as margin goes. And so the way I view it is, let me pull that up again. So as you can see, my account is sitting at $125,000, and over here is the margin that I'm using. So I'm using $54,000 worth of margin, and this is what they call the maintenance requirement, which basically means that in order for me to maintain my margin, my account balance needs to stay above this. So clearly it's double this, so that's what the safety net is, I guess you can say. This is how much I would be allowed to take out of cash against the margin, and this is how much remaining stock power I have to buy. So I could buy $81,000 worth of stocks on top of this. So, you know, I don't want to make a big thing about this, but I basically use margin because it allows me to invest in things, and yes, I pay a fee, but you know, if I bought $10,000 worth of 3M at $170 and it shot up to $175, I could sell it right away. And I couldn't do that if I didn't use margin because I don't have the cash. This is my cash, obviously, because I'm negative. So it just gives you the flexibility to expand your portfolio, and yes, that comes at a big risk. You know, if the stock market crashed and everything ended, this and that, you know, you could get margin called and be forced to sell and lose a ton of money. But the reason I'm so heavily using margin right now is because of my Tesla gains, because you know, I'm up $69,000, which is well below my margin balance, if you haven't noticed. So that has kind of been my rule of thumb, is that I am going to keep my margin below what my profits in Tesla are. So, you know, push came to shove, if I had to, I could sell out of Tesla. I could sell my profits out of Tesla and pay off my margin. And not only that, you know, I bought QYLD off margin, and I'm being charged 8% now yearly for this margin balance, and I'm collecting 11% on dividends, which has been very stable and reliable. So, you know, there are advantages to margin, but like I said, it is not for everybody. So do not use it if you're not comfortable or if you haven't spoken to a professional. I'm just sharing my stupid advice. So, you know, comment down below what you guys think. I'd actually love for you guys to comment down below and tell me what you think I should do with this portfolio. Should I make this centered more towards growth and maybe sell some of the dividend holdings here and start building them up in M1 and make M1 like a purely dividend portfolio? You know, I go back and forth every day, so I'm not sure how this portfolio will look in the near future. So comment down below what you guys think about that, and as always, make sure you subscribe and like the video, and I will see you in the next one.